Shailendra, thanks very much for speaking to CNBC.
Thank you for having me. I'm very grateful for the chance to talk to you.
Okay, let's start by talking about the rebranding exercise that's happened. Your fund has been rebranded from Sequoia Asia to Peak 15 Partners. How's the transition been? More importantly, what impact has it had on your business and your investing style?
Look, first and most important, Sequoia is a phenomenal institution, and I couldn't be more grateful for my long 17-year journey with them. But look, for me and all my partners, it is incredibly exciting to be independent and to be like founders. So it's like the start of a founder journey, started a year ago. I think first year has gone better than we expected. We think we are just on a very long-term, multi-decade journey here, and just got new wings to be able to do all kinds of new and interesting things. So we are pretty excited. Core business, doing seed, Series A, Series B investing is again going quite well, and I think especially our region has really looked up. So we haven't had the challenges of the Western world and the interest rate environment and all. They have not hit our region so hard. So I think overall things have gone better than I had expected.
So when people are talking about the funding winter impacting the business, the VC business, the investing business overall, what do you say to that? How are you seeing things play out, especially now that the narrative is still very much higher rates for longer?
It's so interesting. I find it so fascinating that there is such a crazy arbitrage in the investment world for long-term operators, long-term thinkers. If you look at the trajectory of a company, you can look at some public companies, you see year-on-year revenue growth. You might find a very steady, consistent trend. This company is consistently growing 30, 40% a year. Look at the stock price, it'll show immense volatility. Sometimes it's trading for 30 times revenue, other times trading for 6 times revenue. Right? But the core underlying business is continuing to trend upwards, right, and looking good. So I think if you put yourself in my shoes, I feel, look, tech businesses, the kinds of businesses we like to back and help scale. First, there's an unprecedented number of scale tech businesses being built in our region. So like, I think we have some 43 or 45 companies now with triple-digit million revenues. A large percentage of these are now profitable. So that's pretty interesting. Like, it just focused on fundamentals, and then similarly, and not only that, they're beginning to demonstrate very strong return on equity characteristics, strong moats, market leadership. Now, valuations going up and down is so, cyclical, and like that'll always stay. You can look across decades and you find these cycles. And I think for people who are building,
we're in a cyclical downturn right now. Wouldn't you say?
I'm not sure it's a downturn. I think for tech, it's a phenomenal time to be building great businesses. And my point is, on a first principles basis, companies look really good to us. And if somebody was investing for 5 or 10 years, it's a great time to be building tech businesses. The lack of abundance of free money actually raises the bar on quality of business to be built. So it's actually on a first principles basis, businesses, healthier and better quality businesses are being built. And it doesn't matter if in the short term they're valued less in public markets. Does that make sense? So like,
but for scalability,
yes,
right? You want the funding spring to arrive. And so when do you see that happen? Because in January, I remember you said in your previous interview that
yes,
in a couple of months, deal activity will pick up. Now,
it has picked up.
It has?
It has picked up, yeah. I think all across the world.
Okay.
So, I was in the US a couple of times earlier this year. I heard from all VCs there that deal activity is up significantly.
In the last 3 months?
Yeah, I mean, since the start of this year, it's especially driven by AI, of course. I think we are seeing something similar in India and Southeast Asia. I think things have picked up quite nicely this year. But again, I think, the right indicator is not whether there is deal activity or not. The right question to ask is, are high quality scale businesses being built in tech? And I think that trend is up and to the right strongly, meaning that tech is becoming more and more clear that, software-led businesses or technology-led businesses will be the way very large companies, disruptive companies get built in our region and everywhere else in the world.
I guess the other question is, how easily are checks being signed to provide that scalability?
So actually, okay, so very good question. Your question implies that without tremendous amounts of capital, tech businesses can't be built. Okay.
At least in the next phase.
But in fact, what most founders discover is that a lot of the capital is raised because they can raise it. It's actually not necessary. It's not. This is the difference between an infrastructure business and a technology business. Where a technology business, a humongous business, can be built with a small amount of capital if they so choose, or if the business model is interesting enough.
Got it.
You can launch a new consumer internet property, or you can launch a brand and so on. It'll go viral, You can have a very large and profitable business for relatively small amounts of money. There is the non-linearity of tech, which is very visible in today's market, because as funding dries up, tech looks more and more non-linear, which is what you want. When too much capital is available, people start making inefficient choices because it's very easy to raise money. And I think it's actually a big distraction for founders to have a lot more money than they need. And in fact, people tend to build. Okay, so I'll distill this down. I think people tend to build more momentum-centric businesses when too much money is available. And people tend to build stronger moats and higher quality of businesses when less capital is available. So what we see happening is, in my opinion, better quality businesses are being built, which is why I'm on record multiple times saying this tech winter is great. I hope it stays, because I feel like founders and everybody else in the ecosystem, VCs alike, are being forced to raise the bar and build a higher quality of business, and that's sustainable for a long period of time, whereas the whole chasing momentum, etc., is not a sustainable strategy.
Okay, let's talk about India, which is one of your key markets.
Yes.
What's the outlook there as a tech and innovation center? Where do you really see value being created in India's tech story?
So, look, India has multiple areas where pretty exciting things are happening. Our three biggest areas of investment tend to be what we call cross-border software, or software companies being built from India for the world. Our second big sector tends to be fintech. We are a very strong fintech investor, and I think India is one of the world's most fertile markets because of Aadhaar and UPI and India Stack. I think what India has achieved in fintech is truly extraordinary. I don't think anybody expected that the India Stack would become such a powerful platform for innovation for the tech ecosystem. And I think for an emerging market where financial services is so core to taking countries out of poverty or to enabling the economic development of a nation, I think India has really shown the way. And our third sector is consumer-centric. So all things consumer-centric. It could be consumer brands, it could be edtech, it could be healthcare, because a lot of healthcare is consumer paid in markets like India. So I think those are our three big areas, but then there are also emerging areas like deep tech, like semiconductors and so on, which I'd say are early but pretty interesting, and we are starting to make bets in that.
It's interesting you talk about chips and semiconductors, because news that's grabbing the headlines is that SoftBank is selling off its Vision Fund assets to pivot more towards AI and chips. And I wonder, as a VC investor, as a prominent VC investor in the region, whether you're conscious of that trend, whether that resonates with you.
Yeah, so actually if you step back, what's happening in AI is so profound. Basically, 8 billion humans are surrounded by some order of magnitude more devices around us, right? And we're in an era of unprecedented machine intelligence, which didn't exist before. So all our machines and devices, which could be your phone, it could be your laptop, but it could also be some piece of hardware you use, at home, they are now more intelligent because of AI, because AI is enabling more machine learning and more machine intelligence. So I think human intelligence is being complemented by machine intelligence at a pretty unprecedented rate. So I think we will see lots of investments across newer or more interesting chips. But
are you consciously moving in that direction? AI-enabled businesses, businesses which are part of the chip supply chain.
Of course, like I think the last surge cohorts had a majority of these semiconductor and AI companies, and that's the leading funnel. Our surge cohorts and our early stage cohort tends to be the leading funnel. I think us and lots of other investors are spending tons of time in it. I think it's a very big area where a pretty dramatic shift is playing out, but it's a marathon. It's going to keep going like this. I think it's a 10, 20-year new platform shift.
Okay.
And this idea that machines are now going to be more intelligent, around us in all forms. It could be phones or other things. Is very deeply profound, and I think it's going to impact humanity in a pretty significant manner.
And we'll talk more about AI, especially AI valuations and chip valuations in the market in a bit. But I just want to touch upon the China story, the China versus India trade, because in one of your early interviews you said that money was moving out of China, getting into India. Is it a structural shift or a tactical one?
Look, I'm not a China expert at all, and I think the fact that China has become a harder place to invest is a sentiment I've heard from all my colleagues in the ecosystem and from LPs and so on. I think that the China plus one strategy, some people call it, in terms of sourcing and so on, that is definitely benefiting places like India, Southeast Asia, and other places. But look, in the very long term, if you take a 10, 20, 30-year view, if you assume that geopolitics will find some new normal, look, China is going to be a huge economy, and good businesses will be built in China. So I think all of us around the world, while India might benefit or Southeast Asia might benefit in the short term, should really be thinking about how will we work well with China in the long term. So I think there's a short-termness to this in terms of, yes, there is such a trend that we see, but I think in the mid to long term, my hope would be that China integrates more back from a business perspective, and more cross-border China businesses also get built, by the way, which we see plenty of. So we see plenty of Chinese companies relocating headquarters to Singapore. Singapore is a phenomenal location to build a global business out of, and then trying to build global businesses from here. And that's a big new trend here locally in this market.
So despite geopolitical headwinds, despite increasing trade barriers, you think China would find success in rebalancing its growth more towards technology and innovation? They might find success there because that's where they're moving towards right now.
Well, I think that a lot of Chinese technology companies seem to us, and again, I'm no expert, but seem to us to be making the call to say, hey, if we had to build a global business, it's better to re-domicile to Singapore and base your leadership teams there and try to build a global team out of Singapore and build a global proposition out of Singapore. So we do see some trends in that direction,
Okay. I want to talk about the US tech market as well, right? The tech rally there. Is it a bubble? That's a long pause.
No, not even close.
Not even close, really?
Not even close.
Why? Why do you say that?
Because, I think the good news is you can look at the last 8 quarters, 10 quarters and see, look, something that investors really should focus on, and at least we look for what we call operating leverage, which means that when a company grows revenues, does the bottom line expand disproportionately or not? So if you look at the software universe, you are seeing immense amounts of operating leverage come through in these companies. So these companies have pivoted from higher growth to more, I'd say, attractive but not crazy growth, but very high operating leverage, a whole bunch of software companies. And actually, for the first time, you can buy a high quality software business for a multiple of free cash flow, which is the most core principle of valuing a company. So, if you're buying on multiples of free cash flow and not paying a crazy amount, that's a pretty good way to be investing in tech.
The market's obsession. I mean, you look at the move in the stock like NVIDIA, and I know you can't talk stocks, but I'm just taking that example. It's obsession with AI and AI tech valuations. Look, it's a parabolic move. Is it sustainable? Because it's also reminiscent, many say, of the EV excitement that we saw in 2021. When Tesla went through the roof.
So look, I'm commenting on general software valuations, meaning that I'm saying, I'm not commenting on any specific company, any specific subsector. Sure. There will be points in time when a company or a subsector seems to also have a parabolic revenue or profit trajectory, and they may, people will speculate. Look, yesterday I saw that some GameStop memes are back on and all that, right? So look, the world is filled with, and this is what I meant earlier, which is that, look, the biggest arbitrage in the world, in plain sight, everybody can see it, is that there is very few true long-term actors. And when if people can think and act long-term, I actually think there's lots of very interesting things to still buy in public markets at very compelling valuations. So my point is, broadly, software is not overextended or too expensive in my view.
Okay.
Or tech is not. Now, I don't want to comment on specific companies or specific subsectors.
Even AI tech companies.
I cannot comment on AI. Look, I think
there are broadly speaking, as a sector. I mean, look at
I think AI valuations are pretty frothy in my view.
Yeah.
So
companies focused on AI, you think, have run
they have
ahead
frothy
of
valuations because also they are seeing exponential growth in some cases. So, look, it's confusing for people to figure out, hey, how long will this trend last? Or if this multiplicative trend continues for another X number of quarters, how big does this company become? So, people can take different parts of that, bet, but inherently, AI-led, infrastructure or software, etc., is growing very fast.
Yeah, and what about ethical AI? Because Warren Buffett, of course, has warned that AI scams could be the potential next growth sector.
Look, first, I think any technology, AI is definitely one of them, can be used both for lots of social good, but it can also be used for bad things. So, that's true of any technology. I think there's been plenty of debate can AI be used in weapons, or can it be used in hacking or whatever in a bad manner? I think the industry will have to just collectively make sure that the good guys win, and like there's enough good AI being built to make sure you can protect against all the bad use cases of AI. But there will be for every take quantum computing. Everybody says, hey, once quantum computers become mainstream, you'll be able to break all encryption pretty easily, and that's a threat to cybersecurity. But that doesn't mean the world shouldn't pursue quantum computing if it's the next frontier of gain in computing power.
Give us some of the future trends in AI adoption that you foresee, in the foreseeable future, in the near term, even perhaps medium term, for that matter, because we're now just talking, fresh off the press, talking about the Chat GPT upgrade.
Yeah, look, I think first AI will impact life in pretty profound ways for everyone. But the things that we're spending time everywhere. We do think consumer applications get rebuilt in many ways. For example, lots of people who may not be big users of technology can become more regular users of new technology or applications because the interface evolves and changes. Because machine-led interfaces are now more intelligent and can engage with humans differently than maybe they did in the past. So that could be pretty dramatic. I think obviously enterprises will discover new levels of efficiency, whether it comes to customer service or it comes to having intelligence on their customers or engaging their customers. So I think businesses will look for various ways to drive both revenue and bottom line improvements by leveraging AI. And I think this is a top topic for all CEOs and CIOs. When I speak to people out in broader industry outside of the VC ecosystem or large company CEOs, number one topic is, hey, Shailendra, what should we be doing? Which areas and which applications should we be prioritizing to get the maximum bang for the buck from AI as quickly as possible? Okay, so this is a question everybody asks.
And how is India coping with the global adoption of AI, especially because obviously there's much talk about what this means in terms of risk to jobs, employability for a large economy like India, having a large population?
Yeah, see, I think in the long term what happens is when there's a big technical leap, it results in the creation of new companies, new sectors, new capabilities, and in general it results in creation and lots of wealth for society at large. In the short term, the forces can be disruptive. For example, let's say coding gets highly automated, writing software. You could argue that, hey, services companies that do software development could see shrinking revenue, but I would also argue that maybe 10x more code will get written now, because forever we've heard that people want more software engineers. Well, now you have AI that can complement humans, and you can write more software more efficiently, better, and hopefully deploy better. So I think it's very early to say whether the disruption, it's very clear in the long term, I think society will be net beneficiary. Places like India will be a net beneficiary. In the short term, sure, there could be some disruption.
Okay, I also want to talk about an important sticking point, which companies, investors at large face, all stakeholders actually face in this funding environment, and that is evaluating companies on the basis of corporate governance standards. Now, India has been getting some unflattering, unfavorable headlines on that front, both public and private sector companies. Japan and Korea have set examples of how improving corporate governance really helps in attracting more capital. What can India do to fare better on that front?
So first, the one thing I'll say is India has plenty of companies that are stalwarts and well regarded for corporate governance, whether it's Infosys or HDFC Bank or several others who have really set great examples over the years. And so, I think actually my general view is, especially in Indian public markets, the regulatory framework, what SEBI does, what RBI does, what other regulators do is actually really good. Private markets, especially all emerging markets, will have some challenges. But by the way, they're not restricted to emerging markets; they're all over the world. And I think it's just a journey. At least where we operate, young startup founders are basically product people. Sometimes they're engineers. Young companies we back for $2 or $3 million. They may not have a CFO for the first 2 years after our investment. They just don't need one. They don't have a business yet. They're just building a product. So what happens is a startup has very little governance. And as it becomes a real business, and it starts to have scale and hundreds of employees, then it becomes pretty important to have high quality governance. And then especially as it readies to be a public company, I think it becomes more and more important. And I think over time, what the ecosystem people have concurred is actually there is a premium for good governance, like you highlighted. And actually that shows up in, if you have great governance, it's going to show up in a premium in how you trade in public markets later on. So I think a lot of founders who are going to evolve to becoming great CEOs recognize that and start to work on it, and then try to set a great example for it. So
are you seeing that shift happen consciously?
Yeah, look, we have lots of companies that have gone public, right, in our portfolio. And I think since pandemic, we've had 13 or 14 IPOs. We have 3 companies currently in the public process. And actually, as part of the IPO preparation process, there's a big focus for us. In the 2 years prior to that, we try to make sure, hey, there are independent board members, all the committees are formed, governance has been improved to a standard where once there are public stakeholders in the company, the burden is higher.
Okay.
When there are only private stakeholders in a company, in a way, the burden is a little bit lower, because those private stakeholders are normally institutions who can do their own diligence and who can do their, take care of their own interest. Once you have public stakeholder in a company and a common person owns your stock, I think the burden of governance just goes up pretty significantly. And we have a conscious effort to try to help companies, sort of get better at that before they go public.
Okay, just the last couple of questions, Shailendra, before we wrap up. I do want to get your sense. Now, I know you can't talk specific investments, but just taking the example of Byju's, do you think that's cast a shadow of doubt on how well edtech companies can be run in India?
No, we have plenty of good edtech companies that are scaling very nicely. I cannot comment on Byju's, of course, but look.
Because at the end of the day, there is a huge opportunity for good quality education.
All around the world.
Yeah. And especially in India, wouldn't you say?
Correct.
Right, high quality online education. And so how do you make these businesses viable?
Yeah, it's very interesting. Nobody talks about it, but I think YouTube is one of the world's largest education companies. Okay, and tens of millions of people are learning on YouTube, and millions of people are earning on YouTube as an education platform, but nobody talks about it. So I think first, look, education is a very important sector. Places like India and China are very interesting, where the consumers, where people have understood that the path of upward social mobility is through education. So there's a disproportionate focus in families to try to get their kids world-class education or the best possible education. And the willingness to pay surprises us, because you would expect that per capita GDP is so low, but the education AOEs are surprisingly high compared to that. So look, we think our team's view is we will see plenty of good education companies be built in the long term.
Okay. Especially in India, you see the opportunity only increasing.
Yeah, we don't see any reason why that won't happen.
Okay. You've overseen a lot of IPOs. I think more than a dozen IPOs over the course of the last 5 years across many jurisdictions. What sets apart India as a preferred IPO market, you think?
Yeah, so I think the Indian capital markets have evolved quite a bit. The markets have deepened in terms of liquidity. There's lots of interest in tech companies coming up because, like I said to you, we are beginning to see a large number of companies with triple-digit million revenues and profits. Indian markets love profits, by the way, so no secret.
But between the US, why would they come and list in India?
Yeah, so
especially for the Indian companies domiciled overseas, I believe there's this trend of homecoming IPOs,
Correct.
Right?
So I think what founders are realizing is that the US markets may not always understand Indian companies, and the bar has gotten raised a lot in the US. You want to ideally have at least $500 million of revenue to go public. And then even if you're a $3-4 billion market cap company in the US, no analyst might cover you. You may not have enough flows to interest analysts or investment banks and so on. But in India, you're a local company, the brand is well known, and people are pretty interested. So we have currently 3 companies in the IPO pipeline. We've had over a dozen, like you said, since pandemic. And we think the market is pretty conducive and more liquid than it has been at any time in the past. It's driven by 2-3 factors. Now there is domestic institutional capital, there's a lot of retail capital, and there's also global capital. All 3 coexist now, and that has really changed. The level of liquidity has changed. And then I also would say, huge credit to the Indian regulatory machinery that has really created a very favorable environment for companies to list and for, I'd say it's both safe and dynamic, in India for a young company to be able to go public.